Okay, what's going on, guys? Okay, what is going on, family? What's going on, family? Today we're gonna be breaking down this Ethereum chart for the week. Ethereum, as we know, in the crypto market, everything is looking pretty bearish right now. Uh, I'm going to explain my strategy to you guys. Well, what I see and how I come up with things. So as you can see, I know it's a bunch of lines and everything up here, but if I hide these lines, well, if I'm first, you know what I'm gonna do? I'm gonna just hide my candlesticks. I'm gonna hide my candlesticks and go right over here. Find my candlesticks and wicks, orders. All right. So guys, now that we got that, I can explain to you what this is here. These here are envelopes. I use 2 sets of envelopes, right? I'm gonna hide them and I'm gonna turn them back on. Okay, so the first one I use is my 21 envelope. I got a 21 envelope, see the red band, and you got my blue band. My middle band is a moving average. It's a 21 moving average. All right, and the 21 is the 21 moving average of the past 21 candles previous to the candle that is on, whatever candle that is on. So that's how the moving average works. And when price, basically how the envelopes work, when price comes to my red band or above my red band right here, or it comes to my red band or above the red band area, when it comes to those areas, it means that price is overbought. I mean, there's a lot of people buying it. Is either overbought or is extremely high buy pressure, extremely high buying pressure, and it could be on an uptrend. But in this case, we are in a bear market with crypto. So my red bands really act as like, I look for like, when the price comes to my red bands, I'm looking for either order block areas. I want to see top wick rejections. I want to see candlesticks forming top wicks. I want to see it respecting my red bands. Or even when I really want to catch it, the best time to really catch it is when it's outside of the red bands. If it's outside of the red bands and it busts through here, it's extremely overbought. It was a strong uptrend, but you want to, if you're catching a sell, I would sell. I would only want to look for a sell when it's at my red bands. Only, that's all I want to do is look for a sell. I don't care if it's on an uptrend. If it's on an uptrend or whatever, I would still want to catch the sell outside of the red bands, getting top wick rejections, wait till the candlestick close, enter on the next candlestick, and take it down. And then if it's on an uptrend, you will see bottom wick rejections to come to the red band and push up. So you would exit out the move if you see bottom wick rejections. It was like it's going to respect it if it's on an uptrend. So that's my first band, my first envelope that I'm looking at, the 21. Then I use another one, which is the 41. No, I'm sorry, the 40. I got one that's a 40, and that one I got them in different colors. I'm gonna hide the first one. This is the second one. You see, the 40 is a little different than the first one. It's a little wider, and you can see you see, all right, you see how they intertwine with each other. So every time these red bands or blue bands crosses each other and price comes to those areas, these are confluence areas. I'm gonna show them to you in a minute. All right, so when price see right here, I'm gonna circle all the times they cross, right? So when price cross right here, this is a confluence zone, that's a strong zone. It's a cross right here, this is a strong zone right here. Right here, this is cross right here, that's a strong confluence area. This is a confluence area right here. All right. And yeah, so these areas are confluence areas, right? So when I turn back on my candlesticks, you will see where price is respecting in my bands or my envelopes, right? So I'm gonna turn my body on, turn my borders back on, and turn my wicks back on. So as you can see right here, price came, our first one, price came, we got a big bullish candle right here. I'm gonna circle this. We got a big bullish candle right here. Then after that big bullish candle, we got a wick, top wick rejections on this candle. Price come down. I would want to enter on the close of this candle and the next candle and take it down. And take it down. And that's on a 45-minute chart. Let me switch the 45-minute chart to the 1 hour chart because I use the 1 hour time frame. If it's not set up on the 1 hour, it's not ready yet. Price is not ready yet. I don't care what the 15-minute, you want the 1 hour to match what your daily is seeing or your 5-minute is doing. If you want to scalp it, right? So you got this big bullish candle, like I circle right here, big bullish candle right there. Top wick rejection. You wait for the close of this candle. Right, you got that big bullish candle, and then you can wait for this candle to happen. You can either wait for the close of this bullish candle to happen, hop in the next candle, you wait for the close to happen, hop in this candle, take it down. It's outside of the red bands, and you take it down until it comes to a confluence area where it crosses right here. It came down to the next red line right here, came back up. If you would have got in right here, you took it down. This candle, this doji candle before this next candle, that big wick pushing back up, that's letting us know there was buying pressure right there. So if it went down again, the next time it go down, I would have just took profit right there and just waited again, because that was telling me that price could potentially shoot back up again, right? So then it happens again. Price comes back up outside the band. Wait for this wick, wait for you get a top wick rejection outside the band. Wait for that candle to close. Take it down again. Take it down again, right? Then once you see this bullish candle, once you get a bullish candle outside of the bands, if you're getting bullish candles after it went out the bands and you're starting to get bullish candles, the first bullish candle, you can either move your stop loss down or just take profit, close the move out. Just get whatever pips you got, close the move out, wait for it to come back again. And if it come back again, you know you can just box in these areas. And how you play with these wicks, you just put boxes on these wicks. So I'm gonna get my rectangle. So the first time it came right here, you go from wick to body. Wick to body, it came right there, right? Wick to body. Right there. Oh, okay. I'll bring it up. Right there. Wick the body, first time it came, right? Then the second time it came back, go wick the body. It came right here. Wick the body. Wick the body, it came to that area. So these will be the attack areas, right? So we know it came in this box again, we're taking it back down for a sale again. Take it back down for a sale again. So if we get a bullish candle, we're getting out the move, right? So then the next time, then the same thing again. So we got a top wick rejection. This time it came out the bands 3 times. Right there, wick the body. Came again, third time, we got a complete drop. We got a full drop this time. This is what you call bullish divergence. Prices are supposed to come down, but it's going up. It's in an overbought area, but price is going up, right? That's bullish divergence. That's bullish divergence. Price was supposed to come down, but it's going up. So you could have scalped. These first 2 moves could have been our scalper moves. First 2 moves are scalper moves. You got the top wick rejection, you wait for the close of that candle, you take the next one down. Seen a bullish candle, get out the move, or move your stop loss down some, take profit, whatever you want to do. Leave it running if you feel like it's going to come back. But lower your risk, right? Once you see a bullish candle, lower your risk. Take your profit, lower your risk. Come back again, take it again. Get a second entry, soon take it back down again. Once you get a green candle, bullish candle, lower your risk, right? Then you come back up with it. Come back up the third time. And then that's when you get your, look at that, you get your complete drop. You get a complete drop there. you get a complete drop. The third time you get the complete drop, it comes down all the way to 1919, from 2056, from 2057, all the way to 1919. And if we look right now, it's in my area again, right here. We just drag that line to the right there. It's in my area again. So sellers are still waiting here in this area. Sellers are still waiting here in this area. I'm waiting for it to come back again to this box. This bottom box again. If it comes back to this bottom box again, I'm putting a buy order in. Put a buy order in for a scalper buy. Wait for a scalper buy. But right now, really, the bear market, I just want to look for sell positions. I just want to catch retest positions and sell. That's because right now the market is a bear market, right? So in the bear market, you want to find sell positions. That's what you want to find in the bear market, right? So and this strategy works vice versa, the opposite way. If you're looking for the buy position and the price is outside of the bands, you're looking for the buy position, you want price to be outside of the bands. You want price to be outside of the blue bands, and you want to get bottom wick rejections. As soon as you get a bearish candle, close the position. Close the position because it could potentially drop further, right? Then the next time you see a bullish candle, that's your confirmation. You wait for the next time it retests down after that bullish candle and you take it again. You take it up again for the buy. And then once you get a bearish candle, you trail your stop loss. If you find a double bottom, then you just do a trail and stop loss, right? Like right here, this probably would have attacked the stop loss. This would have stopped some buyers out. And then it came back and then it went up again. So yeah, that's just the envelope strategy that I'm using based on in a 10-minute video. I'm trying to explain it to you guys as simply as I can without confusing you. But hopefully that video or this made some kind of sense in a way. I will go more in detail with the strategy and how we can use this strategy to better our trading and make money, man, and make money in this bear market because there's money to be made and we're not leaving any money on the table this year. This year, we're collecting up all the coins, we're buying and selling. Nothing else we can do but buy and sell. That's it. There's only two things you can do in the market. You buy or you sell. If you want to be a holder, you buy it and hold it in your crypto wallet, whatever you want to do, right? You know, stocks, you buying them and holding them, you know, so and you shorten it. They got plenty of words: a call, a buy, a long position, or you can a short, a put, or a sell position. Those three terms of each one mean the same thing. So yeah, man, if y'all like this video, just like and comment, subscribe. Make sure you subscribe to the channel. I'll be dropping trading videos, teach you guys a little of what I know in the market, and you let me know what you think. You guys signing out. Have a good day.